Guys, I'm almost ready to say that gold is going to make a comeback more so than silver in the near future. I'm almost ready to say that. There have been a lot of things that I've been looking at recently while making some of these videos, doing my own bit of research, using my own models that is leading me to think this. Now, you guys know that I've been saying September and October, usually bad times for financial markets because of seasonality. But the macro and fundamentals behind gold are basically showing where we should be. So where are we today? I'm starting off here, and basically we have this article from Kiko saying stagflation risk is back and gold price is ready to react. And let me scroll down here to this highlighted section, and this is what the article had to say. Stagflation is a theme that has been increasing on our collective minds. The fact that gold managed to rally despite falling below 1750 changed the technical outlook. From that perspective, we could see higher gold prices. The 1750 levels now support, and 1800 is resistance. So we've talked on and on this channel about the argument for short run stagflation. Don't need to go into that right now, but check out some of those videos that I've made about inflation, and I'm sure I'll probably mention stagflation and the argument for it. But technical analysis, here is what I have so far on gold. And here's the interesting thing about it. A couple of weeks ago, I said gold's about to hit a double bottom. And if it edges lower, that's a really bad sign. If it, tests, that second bottom, it will be a bullish sign. So here we are today, and it retested that bottom and it bounced up. Now, I did not use Fibonacci for this, but now that I have, I'm starting to the picture is actually starting to become a lot more clear for me here. So if you scroll down, take a look here. We had a previous double bottom here, and from there, gold shot up, and that was back in June from the March lows. Remember, back in March, towards the end of March, things were looking really bad for gold, and then gold had this nice little run right after the end of March. And then, of course, Delta came into the picture and basically ruined all the fun. But then we hit a bottom here on August 9th, which also happens to be the time when gold began to outperform silver in the gold to silver ratio with a golden cross. We saw a golden cross form between gold and silver. Got this first bottom, comes up, tests a high here. So you could say maybe testing a double top, hit a bottom again, and now we're bouncing back up. So if we take a look at the Fibonacci, things are lining up pretty well. We have a lot of trading range happening within this mid 1770, or you can say 1768, going all the way up to almost 1800. So let's just say 1770 to about 1800 is where, if we see this guy continue moving up, we should expect to see a lot of activity. If it bounces above that, we should be between around, let's just say 1800, and this is about 1825. But this is a very key level. As you see, we have not gotten past this point in recent months. If we get past this point, that is a really good sign. But as far as Fibonacci is concerned, this is around the 1825 level. Why is this significant? Well, I, in my forecasting model, put in some of the latest numbers that we have so far. And so far, CPI is at 273, US 10 years at negative 0.85, US M2 is at 27.97, GLD volume for the month of September wound up being 160, 608, 800. You know what that spit out? 1825.91. Now, if you don't believe me, let me just, I'm just going to copy this real quick, and I'm going to just get rid of it. I'm just going to put 0 here. Just so you know that, there is, that this model actually does fluctuate depending on what I put in it. So let me also now just paste that back in there. And again, we're back at 1825.91. So given all of these independent inputs, gold really should be around 1825. And if you don't want to be this exact, fine. You can say it should be higher than where it currently is. And where is gold currently? Gold is currently at 1760. Now again, if you don't want to be that exact with what my model spit out with 1825, you could then say, well, gold should be higher because the macro is behind it. The macro landscape is behind it. Technical analysis from a strong double bottom off of this Fibonacci level, the strong bounce back up from that is also a good sign. We should be higher than where we are. And the gold to silver ratio also shows that we had a golden cross pretty much right around the August 9th level for between gold and silver. So the thing about this is that, actually, let me show you here. This is where it is. This is the golden cross. And let me scroll down so you can see it better. And that's the golden cross right there around August 9th. So let me go back to gold here. So, and right around August 9th, we hit that double bottom and we start to soar back up. So guys, what I'm basically saying is that I think given the fundamentals, macro landscape, technical analysis, my own monthly forecasting model, I see gold going higher in the future. But let me know what you guys think about this in the comment section below.